Hello traders, Lawrence here. Since I got a few questions on the AUDCAD head and shoulder setup, I thought I'd run you through my thought process on the trades that I'm currently in. Okay, let's get started. Okay, looking at the daily chart of the Aussie Canadian market, we can see this market has been in an uptrend since about the middle of March. The uptrend has been going pretty much straight up, and at the end of last month we see a reversal candle appear, as well as divergence. Divergence is basically where the price is making higher highs while the indicator is making lower highs, and you can see this by the red lines. Here price is continuing to go higher while the indicator is making lower and lower peaks. This makes the market ripe for a reversal, but it doesn't confirm whether we'll have a reversal of trend or the market will just go into a consolidation before the uptrend continues. Okay, so zooming in on a 4-hour chart, we can see that same daily reversal candle here, which appears as a strong push down on a 4-hour chart. The market doesn't break the prior low and we go into a consolidation period. This is where you could start anticipating a head and shoulders top pattern forming, and we draw our neckline across the lows. As this market consolidates, it pushes back up and possibly forming the right shoulder of the head and shoulders pattern. At this point, I took the first trade once the engulfing bar appeared on the 4-hour chart. So once I entered the trade, I set initial stop and targets, and the market pushed down pretty quickly after I entered. The market continues to push down, and the head and shoulders pattern completes with a break of the neckline. Also, as the market continues to push down, we now have a lower high and a lower low confirming a new downtrend. The next step is to wait for a pullback to the neckline to see if we can get another entry signal. The market moves around, pushes down a little further, and then moves all the way back up to the neckline. This is where we can look for another setup. The first push up to the neckline was very strong, so I wanted to wait for the momentum to slow down before entering another short trade. Typically, markets will do an ABC correction, and as this was a straight push up, I was looking for the market to pull back and then give one more higher high. And that's what we got here. As the market pushes up, we had an engulfing bar, which was the first chance to add to our position. As the market continues to consolidate, we do get 2 more chances to enter on engulfing bar reversals. However, I missed those trades as I was on vacation and wasn't watching the market as closely. I did, however, catch the double top that formed and as the market moved back into a prior zone. Let's take a look at that setup. This trade was taken on the 1-hour chart on an engulfing bar reversal in the zone of a double top. After I entered the position and set stops and targets, the market immediately sold off and started moving down again. Another way to enter this market would be on a break of the consolidation. To do so, you would have your consolidation drawn with a trend line across the lows. And once the market closes outside that line on the 1-hour chart, you would enter your short trade or wait for a pullback to the trend line. Now that we have a break and a test of the head and shoulders pattern, we can look at our targets. Our first target is based on the head and shoulders pattern, which would be a measure from the top of the head to the neckline and drawn from where the breakout occurred. In this case, we're looking at somewhere in the 93.30s area for our first target. We also have targets based on the daily chart, and that is the 50% retracement that hasn't been made yet is in the 90.80s area. If the market doesn't make it that far, then we have the 38.2% retracement in the 92.25s area and the rising 200 MA around the 91.40s area. Okay, let's go back to the 4-hour chart where we are managing our trades. It is important to remember to update your analysis as new information comes available. So we can draw in our downtrend line here And we can see that we're now having a series of lower highs and lower lows, and we can wait for another opportunity to add to our position. As the market continues to push down, we do get another opportunity to enter an add when the market pulls back to the resistance area and gives us an engulfing bar. Also, it's near our true value zone with the moving averages turning over and crossing. We enter the trade on the close of the engulfing bar, and now we have 3 positions in the market. The week ended with a lower low, lower close, so the downtrend should continue into next week. I'll keep you updated at Crush Pro Trading as this trade progresses. Now let's go over some of the questions that were asked. The first question was, what was the confirmation for you to start the short trade? Well, the first entry was taken based on the divergent high and the strong push down and retracement back up to a daily level, which happened to be in the same area as the left shoulder. This created a textbook setup for a head and shoulders top, even though it was a lower probability trade because we were still in an uptrend technically. And even if the market didn't break the neckline, I still would have reached first targets. The next question is, when is divergence used? I don't trade divergence, but I use it as a confirmation of momentum slowing down. If the momentum was picking up, then there would be no divergence. It's not a reason to take a trade, but if there's a trade setting up, for example, this double top here, and you see that there is divergence going on, then I get a little more excited about the trade. You can use any momentum indicator, and I use the RSI to show me the divergence in the market. Just remember that the higher the time frame, the stronger the signal. The last question was, I noticed the ATR is different on some charts. Which reading should I use? ATR stands for Average True Range, and this is an indicator that measures volatility. You should be using the reading from the same chart that you are taking trades on. Besides the pound markets and in normal volatility, the ATR is usually under 50 on a 4-hour chart and definitely on a 1-hour chart. This is just one example of the kind of trades we are taking together with the Crush Pro teams. If you are interested to learn more, feel free to contact us anytime.